Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus yen. Looking at last week, we had the sharp move to the downside. This is a 4-hour chart. From this point to this point right here is the week's trading range. And you saw a big, huge move to the downside. That move to the downside came right down to some key support level. Defined by the two daily moving averages, which are basically near converged right now. But the green line represents the 200-day moving average. The blue line represents the 100-day moving average. And the price came down to each of those levels, or to the high of those, and then started to rotate back to the upside. We also tested the 50% midpoint of the move up from this low right here to this high right here. That 50% came in at the 137.35. So the low price came between the 200-day and the 50% retracement. We still had a rebound to the upside. The move to the upside came up to a nice little stall point right here, where it was the broken 38.2% retracement of the same move to the upside that we saw at the 50% retracement. So the inability to get above that level has seen the price rotate back to the downside, and these few bars show what is happening in trading here today. Now let's take a closer look at the hourly chart here. Because it tells its own story here from a technical perspective. And as you can see, the price is currently testing the falling 100-hour moving average. So all during this trend to the downside right here, we saw the price move further away from the 100-hour moving average. But the correction on Friday had allowed for the 100-hour moving average to catch up with the price, and we saw a rotation to the downside, now a rotation back to the upside in early New York trading. So we are seeing the 100-hour moving average being tested. If we get and stay above that moving average, that's going to give the buyers some added confidence. If we were able to get above this, the broken 38.2% retracement, remember that off of the 4-hour chart, that too would increase the bullish bias in this swing area right through here. You have to go back again to the 4-hour chart to see where that is defined. And that area between 138.73 and 139 has a number of different swing lows and swing highs going back in time. Outline through here, a bunch of swing highs through here, then became a support level through here, and then a little resistance level. And you can see how the price rotated above and below this area here. But the common theme is that either it was resistance or it was a support. It was either resistance or support before it moved to the upside. And in trading last week, once again, we came down to that area, found some initial support, broke through it, then came up to it and found resistance. We did have one little break above it to that 38.2% retracement. If we get above the 139 level, that's going to be more positive here for this currency pair. Than the 38.2% retracement would open the door for further upside. So key technical levels being tested in the early New York session here in the New York day. My name is Greg McCloskey. Good fortune with your trading. Bye bye now.